Hello everyone, welcome back to CryptoCache. Thank you so much for joining me here. I hope you're having an amazing day. We're going to take another look at Bitcoin here, of course, help understand best practice, big picture, see what's going on, and really just try to understand kind of where we're at for key level resistances and supports. We saw 21,000 hold as a strong support, but 21.6 was a previous resistance. We're going to see if that holds as well. We'll look at that and a handful of other things, of course. So if you are new to the channel, just know I'm not a financial advisor. I really do love teaching people to trade. I hope you can learn something here today. And I'm just passionate about helping people become more self-sufficient and essentially just teaching them to live to trade on their own, right? That's the whole point of this, of course. So if you want to become a better trader, CryptoCache.tech is a site, link in the description below, where you can learn to become a better trader with my trading academy, as well as the signals that I send to help you kind of structure your trades effectively. So what we want to do is kind of jump right in here to Bitcoin and just kind of look at the daily. Again, we're not going to worry too much about the monthly or the weekly for the moment. We understand the narrative there is still an overall downtrend, and we're testing key level supports for the moment, so we should be able to maintain above that. But once again, that is something we'll look at here a little closer to month end. For right now, the focus, I would say, would be more so on the daily and or micro time frames. In other words, what's going to happen in the next 24 hours, especially with the Fed meeting here today. Now, yesterday and today, they start the meetings on the 26th, and then on the 27th, they essentially have that, it's aired live, essentially, and that's when things get kind of crazy. So today at 11:30 a.m. Pacific, 2:30 p.m. Pacific, or Eastern Standard Time, rather, that is when you can essentially be able to tune in, and it's interesting, every little thing that he says, the price will either shoot up or shoot down based on it. So it's a lot of volatility, so just be prepared for that. If you have open positions right now, make sure they're low, low leverage. That's what we're doing. We have low leverage, low position sizing on our leverage trading. So, if just say, heaven forbid, the price spikes up or down, we're not going to get stopped out because of that. Okay. Again, just some things to think about there if you are considering that as an option for trading. For right now, I would, of course, suggest not pursuing a long position just in general. Again, it's kind of a gamble, but for the most part, we're under a strong resistance level here at 21,600. But also, just in general, we're underneath the 50-day simple moving average still, and we haven't had a clean close above that yet. So in that sense, I would just recommend waiting until we have confirmation that this downtrend has finished. Okay, so it's one of those things we just got to kind of get through where we're at here presently with the price action progressing lower, and make sure that we're in a position where we can comfortably take a long instead of just say benefiting from a short. All right, so anyways, regardless of that fact, here's kind of some obvious stuff here. We're retesting 50 on the RSI. Could potentially work as a resistance level once more. That could maintain itself, and we could actually see the price action stay below 50, which would be very synonymous here again with 21,600. So if we can close above 21.6 today, then that would put us up over the 50 and effectively give us a potential leg up for the following trading days. Okay. Now, as I mentioned previously, yesterday we looked at all the last few Fed meetings and just essentially what happened, and we saw extreme volatility on the same day. They're typically a result in doji candles, and then of course the following few days are either a significant increase or significant decrease. So at this point, we could go either way. We could technically go down because of the fact that we're getting held down by the 50-day simple moving average here, as well as a 20. And then of course, we have a MACD divergence here almost fully formed. So again, a lot of reasons why a long position is not a good idea, and the fact that the price action should reject at 21.6 and effectively continue to retrace lower to retest, in my opinion, at least 20,000. It would actually be beneficial to see a retest of 20,000 in the overall sense of things. Not only can we add to our position at a lower price point, but more important, we could get a nice, clean, strong bounce there, essentially still maintaining higher lows. Okay, so right now, keep this in mind, we're still making higher lows and tentatively higher highs for Bitcoin for the moment. All right, just that's kind of the recent narrative, but in an overall sense of things, we're still moving downward. Okay, got to recognize that. All right, so let's go ahead and take a look at the 4-hour here. We can see we're under basically two of the major key level resistances regarding the simple moving averages. The 200 is maintaining itself as a potential support level, which is synonymous in a lot of ways, in some cases, with the 50-day simple moving average on the daily. In other words, it carries a lot more weight there, so the fact that the price action is holding above that is a positive sign. That is good, but it doesn't necessarily mean that we're in the clear. Okay. Again, we got a strong resistance here at 21,600. That was a one-day candlestick closure place in which the price could not close above 21.6 for multiple days in a row. Okay, we actually, in fact, had double doji candle here back in what I think it was the 8th and 9th, and then of course recently we broke down below that. Should work as a continued resistance level until it breaks, of course, upside. So for the moment, that's essentially where we're at there on that. Looking at the RSI, you can see with 50 on the RSI still working as a tentative resistance. Now keep in mind the RSI on the 4 hours is a little different than the daily as far as a consistency is concerned, but it does still benefit you in understanding that we're still overall bearish for the moment until we can get back up above that level. Okay. We do have a MACD convergence here on the 4 hour, which is a positive sign. This definitely is a good sign here. Does imply that the bears have essentially lost control because there's a lot more volume bullishly than bearishly recently, and that is essentially that could translate into higher lows and lower highs. Sorry, higher highs and higher lows, at least on the 4 hour time frame. Right. So again, still a little early, still a little tentative for the moment. I'm expecting still that we get rejected at 21,600, but once again, at this point, it's hard to say specifically. I'd much rather rely on the RSI resistance levels than I would a MACD convergence. But once again, you never want to take either or as just say the specific direction you want to head. For right now, though, with the overall sense of things, we are under some key level resistances more than we are above supports. So this MACD convergence, while it's very beneficial and helpful to understand that, it doesn't necessarily mean that we're going to continue to converge bullishly. It just implies that we have a shift in potential momentum on the 4 hour, which could translate to a daily shift as well. So again, we'll see when we get there. Taking a look at the 1 hour though, we want to kind of pay attention here and see. Of course, we came down to a 9 previously. I got a bunch of resets, and I reviewed it somewhere in this range here yesterday. We ended up coming down to a 7. Then up to an 8 and another 6 here. So we're not overextending by any stretch, but it is hitting when we hit an 8 and then followed by a 6. It kind of tells us that it's starting to lose its momentum upwards, but it's still maintaining higher lows and higher highs. So that's a positive sign there in that sense. That could translate once again to a continuation on the 4 hour, and that could be a positive. I'm just concerned myself, honestly, with this resistance level here. It's worked out to be a very strong resistance in the past, and I wouldn't be surprised if it holds the price action down a little bit longer, just based on the overall sense of things, especially with the Fed meeting being today. In other words, it starts on the 26th, but today being the 27th, here in a few hours, 3 hours I think it is, we're going to be able to see some of those fireworks occur, and a lot of times it's a significant sell-off or increase based on what the percentage is that they come up with. Okay, so again, I would expect some kind of extreme candlesticks here in the near future, but minus that, this should hold as a resistance level, again, until it doesn't. Until the price action closes above that level today or tomorrow or whenever, we can expect that to continue to work as a resistance. Okay. Excuse me. So let's take a look at the cloud here. So what this basically tells us here is that if you have a long position open with Bitcoin, it is it's still worth considering keeping open, but on the same accord, it's not like a super strong situation. In other words, we're still underneath the cloud, or within the cloud, you could say. We're within the upper and lower lead. So in most cases, you're not advised to take a long position when that happens. You want a clean close above. So again, if the price action continues to maintain itself and we naturally come above 21,600 in the next 24 hours, that's a different story. That would tell us that we should have a good case in point to take entry. Okay, I'd like to see that and a convergence on the MACD together. For right now, we don't have both, so in my opinion, a long position is not viable. That's just kind of my thoughts because we haven't broken above this. And the reason why it's helpful to know that is because if you look in the past here, whenever the price action has broken above, albeit that was only for a few hours, it inevitably came back down below. Or more importantly, when it travels into the cloud, it has a tendency of staying below the cloud or within. In other words, the likelihood of this breaking above the cloud right now is less likely unless we see a significant volume increase, and of course the bulls decide they want to take control over the next trading day based on, again, the results of what happens today with the news. So Fed meeting will really help us determine and understand the direction that we're heading. Okay, so again, that's kind of where we're at here in that sense, but overall, no confirmation, even though it is nice to have the lagging span free and clear of the price action and the conversion line above the baseline that tells us the momentum has shifted bullishly. We haven't broken through these resistance levels, which to me is the most important. Okay, so again, not quite full-on confirmation. I would say if we're in this, we're at 21.6 or higher this time tomorrow, different story. Long position might be viable, but we still have this descending trend line as well to worry about, so not in the clear whatsoever. That being said, we're overall in a sense here where if we're to kind of just extract everything we've looked at so far, the daily and the 4-hour have more bearish signs than bullish signs, whereas the hourly seems to be slightly bullish. So it's good that we have a nice bullish last 24 hours, but on the same accord, if that cannot maintain itself and we can't break through that resistance level, we'll probably see the price action continue to progress lower to retest 20,000. Now keep in mind also, a green day is very natural. It's very normal to have a green day followed by significant red days. Okay, so keep in mind this could just be that natural knee-jerk reaction where people are buying in. The layman's like you and I are buying in, and the whales are waiting on the sidelines to take their significant profits. That's a very strong likelihood. So to me, no position is a good position right now. While we did open a position yesterday, we almost hit our first target. We're still in that trade because honestly, we're below that level of resistance for Bitcoin, and that implies that we're probably going to stay below that resistance for the other coin that we traded as well. So again, just keep in mind that there's no guarantees in this market, but again, the probability of Bitcoin breaking through that key level resistance today, I would say is less likely, but it could still happen. You got to be okay with that, and you got to be aware and ready for it too. Okay, but it does look more likely based on the overall sense of things here that we are still more likely to kind of see a continuation of the downside, maybe a retest at 20,000, followed by a continuation upwards to fill the gap at 28,000 for that CME gap earlier in the month. So again, something to kind of consider. That being said, that's pretty much where we're at. Not much else to really note. Hopefully this made sense to you and it's clear and concise. Feel free to comment below if you have any questions or concerns. Message me direct, use the comment section, or not the comment section, because there's a lot of spammers down there. Only use the description below for my contact information if you want to get a hold of me. Again, I do have discounts for my third world countries as well as military and just things that I like to help offer to make things better for you. So just to keep that in mind as well. But I do greatly appreciate you and my community also too. Thank you so much to my current community members as well for joining in our roundtable discussion yesterday. That was fantastic to get together with y'all, all learn as much as we can and grow together too. It's really excellent. So thank you so much for the positive feedback too. Greatly appreciate that. So we will look forward to seeing you in the next video. Have yourself a great rest of your day. Thanks again for your time. See ya.